G'day traders, 1 minute mindset reset. Today we're talking about keeping the money in your account. One of the big things I focus on is rinse and repeat, because as I talk about, your screen time is limited, and when you identify whether you're trading a stop hunt, a trend trade, whatever that is in the session that you're trading, it could be a vertical move, a day 2 trend trade, it could be day 3 breakout reversal, it could be high session, high day, short squeeze, as we saw on gold and pound and euro today. But once that money's in your account, and that's a scalable rinse and repeat setup, what traders often will do is keep trading, because the markets are there and they're trading and there's movement and they keep trading. And you know, even if they lock in the money on the day, they have a big day, they make 3, 4 figures, 5 figures on Monday, 4 or 5 figures, 3 figures on Tuesday. By the end of the week, they're up in the hole because they get overconfident, elated, oversizing, over leveraging. And again, these are lessons that I have learned the hard way. Triple, quadruple profits by the end of the week, give it all back on 1 or 2 stupid trades. And so when I talk about locking in the money and getting off the screen, that's because those are rinse and repeat days, trading setups, and behavioral patterns. I work for a certain window of time. I don't care if I miss out on a big move. I don't care if I catch a big move. I come back and I do the same thing the next day, focusing on whether or not the opportunity is there in the session that I'm trading, if it's a scalable opportunity or if it's a session scalp, whatever that may be. But the key thing is maintaining your emotional composure, maintaining your emotional capital, and being resilient to sticking to the process, because that's ultimately, again, we talk about these things where traders want to have a back testing their model and all those things, and I always talk about back test yourself, how you're going to behave day in and day out. The entry and exit is the least of the criteria. Once you understand even 1 or 2 setups, it's what you're going to do and how you're going to behave day in and day out, week in, week out, month in and month out, because ultimately you are the variable. So locking in the money is a fantastic way to get on with your day, and then also have a chance to come back and reflect on what you did well, what you could have done better, what you're going to do better the next day, and what setup you identified as the best candidate on the day, or if you did identify the best candidate, how you could have maybe traded it better or used more size if it was a scalable opportunity, or if you did everything perfect, perfect. Maintaining again what you did after the trade. Hopefully you didn't go back and give any of the money back. These are all the things that will ultimately cause the undoing of a successful, building up your account, growing it, and then undoing it, because there has to be parameters in there that allow you to continue to grow with your performance side of things, in terms of your emotional capital, your behavior, your preparation, your process, and all the things that will cause you to keep getting better. So hopefully you got value from that today's video, traders. Again, hopefully everybody had a great long weekend. I know we did here in Canada. It was a beautiful weekend, and it took a few days to recharge, and so enjoy your day, keep it going, keep it growing. May the markets go with you.